Hello and welcome to the marketplace. My name is Winston Taki. Coming up in this bulletin, inflation rate for the month of October 2025 slows to 8%, the lowest since June 2021, as government consolidates single-digit gains recorded earlier this year. Also coming up, some banks don't require any money as initial deposit requirement and minimum operating balance as they take steps to encourage savings among the populace. Also, Ghana's crude oil production fell by about 25% between 2024 and 2025, a trend Energy Minister John Jinapor says signals declining investor confidence in the petroleum sector.
From a peak of 71 million barrels in 2019, we are now at 48 million, a decline of about 32% in just 5 years. If you read this year's PIAC report, oil production from last year to this year has dropped by about 25%.
We have more updates and some stories coming up in this bulletin. Stay tuned. And now to our first business story. Some commercial banks are pressing ahead with no money needed as initial deposit as well as minimum operating balance. That's according to the September ending survey on bank charges released by the Bank of Ghana. There's more in this report.
Data released by the Financial Stability Department of the Bank of Ghana showed that with Guarantee Trust Bank, one does not require any funds or money as the initial deposit required to open a savings account and even minimum operating balance. This should mean that by just capturing your details and meeting the Know Your Customer policy requirement, that customer is good to go to have an active savings account with the bank. Some see this as a strategy to grow their savings account base of a bank, with the impression that it could motivate the person to save with the bank or use it as his salary account if the person is a worker. Guarantee Trust Bank has also extended this zero balance and requirement to its current account for individual, small businesses and corporates as well. Banks like Standard Chartered Bank and Zenith Bank also did not need any amount when it comes to the minimum operating balance for savings account, while some other banks were asking for as much as 50 to 1,000 cedis. The data again showed that major of the commercial banks were not charging their clients when it comes to mobile banking, short messaging alert, email and internet banking. In terms of charges on current accounts, about 11 commercial banks, including Stanbic Bank and Standard Chartered Bank, were not charging anything when it comes to commission on turnover. A careful look at the charges report showed that more commercial banks are reducing their charges on customers and clients. It is not clear for now how the commercial banks are growing their income. On foreign currency account, with as low as $50, you can open an account with ABSA.
Now, away from that, inflation rate has slowed further from 9.4% in September to 8% for the month of October. That's according to the data released by the Ghana Statistical Service in Accra today. My colleague James Eshan was at a press conference that announced the numbers and joins us with some details here with us in studio. James, it's good to have you. Great. Now, before we get to what the statistician said, help us understand what the numbers are really.
Well, so this happens to be the 10th consecutive time we are experiencing decline with respect to inflation rate. And this happens to be the lowest since June 2021. When you go way back to June 2021, we recorded some 7.8% for inflation rate. And now when you look at the component in itself, food inflation declined, non-food inflation also declined. Also, that of locally produced items also declined. Then there was a bit of edge with respect to the imported items that saw some bit of edge up because in the September inflation, it was somewhere around 7.8%, 7.4, but now we are seeing 7.8%. And one could probably attribute that to the fact that maybe we are getting closer to December and we have people importing more into the country.
So what is the government saying about the drivers, basically?
Well, he's been quite heavy. There were some 3 recommendations that had to do with government, businesses, and households. With respect to government, he's been heavy on government maintaining some sort of fiscal discipline. He's also been pushing government to sort of address issues with respect to challenges affecting our agriculture sector that had to do with storage. Also mentioned a bit of transportation because, you know, most of these farmers go to their respective farms and conveying these items to the market is actually a big challenge for some of them. So he was heavy on that with respect to government. And also when it comes to businesses, he's asking businesses to also take advantage of the current inflation, the decline in inflation that we're seeing currently, and also make sure they sort of have a certain budget that would cut down costs. So, but then let's listen to the government statistician and what he's been telling the media so far.
The 8% year-on-year inflation rate is lower than the September 2025 inflation rate of 9.4% by 1.4 percentage points, and far below the inflation rate of 23.8% we saw at the end of last year. This marks the 10th straight month of decline in inflation and the lowest inflation rate in 4 years. When we look at prices from September to October 2025, that is month-on-month inflation, prices actually fell a little by 0.4%. So on the average, things cost slightly less in October than in September. This continued slowdown confirms that Ghana's prices are stabilizing after a long period of volatility. Let's break this down further. Inflation for food items like water, cereals and cereal products, fruits and nuts fell to 9.5% in October from 11% in September. This means that food prices went up 9.5% in October compared to last year. Food prices, however, fell by 1% between September and October this year, a sign that food costs are easing. Inflation for non-food items like clothes and rent declined to 6.9% in October from 8.2% in September. There was barely no change in non-food prices between September and October. Inflation for goods like rice, soap, or fuel slowed sharply to 9.3% in October from 11.2% in September. Month-to-month, good prices dropped by 0.7%. Inflation for services like transport and repairs eased slightly from 4.8% in September to 4.6% in October, though services costs rose by 0.5% between the 2 months. Inflation for locally made goods eased.
So we just heard from the government statistician give us highlights on the key developments in the sector. Now, James is still here with me. James, about the regional dynamics, what does the number say?
Well, so the Northeast region still happens to be the highest region with a higher inflation rate. But then there is a bit of decline with them. Somewhere in September, we had some 20%, and now they are hovering around 17%. And the Bunu East region is the lowest. In September, they had 1.2%, and now they were a bit down. That is 1.1%. So with respect to government statistician, he is asking government to also address the regional disparities because it appears some regions are quite recording some high numbers there. So there should be some sort of, government addressing these challenges going forward.
Thank you very much, James, for bringing us up-to-date information with the latest figures, single-digit inflation recorded by the government. And we all know how to understand some dynamics right there. Let's get on Zoom and speak to an economist, Courage Boti, for some analysis on this development. Courage, it's good to have you. What do you make of this latest drop in inflation rate for the month of October?
Right. Towards normalizing an economy that was call it disjointed. Lowest rate of inflation I think we've had has been around 7.8%. At the time we had table rate 12.5, lending rates were coming down. Bond rates at those times were around 15 or so percent. So those were the good times and everything change quickly, and we've had T-bills surging to over 30+%, inflation set to 54. Things are getting normal, and it is the combination of the tight fiscal stance, the
Hello, Courage.
control, the spending part. Yes, can you hear me?
Yes, it's better now. Can you please project your voice a little bit? Thank you very much.
Apologies. So it's a combination of the tightened fiscal controls, and then of course the monetary sterilization that has happened over the last 9 or 10 months. That is culminating into accelerating the pace of disinflation. We are at the point now where you could see from the local side and from the imported inflation side, from the goods and services side, and all of those other, if you like, divisions, you could see clearly that inflation was on a downward trend. And you see from the core, which is the underlying inflation pressure, when you take away the volatile items, foodstuff, petroleum, and all that, also that inflation is well behaved and it's on that track. So I think we are in a good place. The issue now will be anchoring it at these low levels, and that would support very much the governor's agenda to bring lending rate to 10%. For that to happen, we need to have inflation in the single digits and towards the lower end of the inflation target band for that to happen. And so we have done, I believe, the combination of effort from government and then the monetary side has yielded very good results so far. And those are worth keeping or sustaining for the near.
All right, I appreciate if you can project your voice subsequently. Now, the drivers of inflation, food, and even the fact that month on month there was a deflation, were you surprised by this phenomenon?
Not at all. I mean, you look at the dynamics around inflation, the reference period in question. So for this October inflation, the reference period will be, I think, sometime second week of November, September, all the way into October now. Within that period, what do you see CD correcting? What do you see? You see food prices. In fact, we are in the main harvest season, right? And we've had a bumper harvest this year. So food is on the market, and you can see food inflation decelerating. Petroleum prices with exchange rate stable, global dynamics on around geopolitics, meaning and a volume game, meaning that oil prices are also not surging and are quite stable. All of these culminate into favorable prices at that in pump, favorable food prices, and then these would translate into favorable general prices on the market. And if you just oppose that to same period, maybe a year hence, you would realize that things have improved, and that is why you will record a deflation. It is not unusual to see deflation in September and October because normally it coincides with the harvest season, and those are the trends we are actually seeing play out. And with the exchange rate outlook, the interventions happening on the market, you can safely say that the November, December prints would also look favorable in that there will not be pass-throughs from exchange rate due to the Yuletide season feeding in there.
Great. From your perspective, how should managers of the economy take this development? Because government has met its single-digit inflation target, while the Bank of Ghana has also met its medium-term target.
Well, yes. So the efforts that delivered this result is what we need to sustain. There is value in being disciplined, and you need this bedrock to do a lot of other interventions in real sector. For instance, in this moment, growth doesn't necessarily have to be financed from government expenditure necessarily. When we've seen the result this year, averagely half year we have 6.3% growth, but you can see that government spending and CapEx is not as strong, but it's coming from the private sector, and it will be so because banks are aggressively lending. The macros look good, and the environment is right for banks to lend to real sector, critical sectors that drive growth. And so we could actually stimulate growth in the real sector without necessarily ramping up government expenditure if the macro environment is kept stable. And so the effort that led to this kind of outcome is what we need to sustain and even strengthen so that we create an environment where private credit can drive growth in the local economy.
You indicated about private credit availability to businesses. Now, I want to understand from you, the 8% from your perspective, is this something that can be sustained?
Well, I mean, from my projections and looking at the numbers again, I think there is no immediate threat to inflation. Yes, the few threats you could look at around a possible utility tariff adjustment, you could talk about. I mean, we have a budget coming up. You don't know what tax policies are coming and the implications. There is geopolitics, which can change quickly and could lead to maybe exchange rate pressures, reversal in sentiment and all that, that could also impact inflation somehow. Or if you like, even external prices surging and you could have imported inflation in your hands. All these are possibilities. But if you just oppose the upside risk against the growth threat and the domestic dynamics, I think the risk to inflation is largely balanced, and we should be able to anchor inflation within the target band. And I expect that if the 10% lending rate target of the governor can be achieved, then for a sustained period, we need to have inflation closer to the 6% lower band of the medium-term target band for that to happen. And so I think the conditions are right to do so. We just have to sustain the effort and be vigilant on the triggers that could spiral inflation again.
Thank you very much, Kari Djibouti, for speaking to us here on the decline of inflation experience that has dropped for the 10th consecutive time this year. Now, away from that, Ghana's crude oil production dropped by about 25% between 2024 and 2025. Speaking at the 2025 Petroleum Commission Local Content Conference in Takoradi, the Minister of Energy and Green Transition, John Jinapor, said the decline sends a negative signal to investors and paints a bleak outlook for the petroleum sector.
From a peak of 71 million barrels in 2019, we are now at 48 million, a decline of about 32% in just 5 years. If you read this year's PIAC report, oil production from last year to this year has dropped by about 25%. In real monetary terms, the monetary value has dropped by over 50%, from about 1.35 billion in 2024. If the trend continues the way it is, we are going to lose about 50% of that amount. These setbacks have far-reaching implications. They undermine Ghana's fiscal stability and weaken our capacity to fully harness our hydrocarbon resources potential as drivers of industrial development and socio-economic advancement. Against this background, the theme for this year's conference could not have been more appropriate. It aligns perfectly with the reset agenda of His Excellency President John Dramani Mahama, which aims at revitalizing the critical sector of our economy. This theme reflects both our current reality as well as our aspiration, signaling our collective readiness for renewal, for innovation, and strategic redefinition within Ghana's energy landscape.
We have more business update for you right after this break. Stay tuned. Welcome back to the marketplace. My name is Winston Taggart. Now to more business updates. Stakeholders in the fishing sector have begun engagement to make input into the new Fisheries Act, Act 2025. The engagement, organized by the Ocean Governance and the University of Ghana School of Law, aims to solicit broader ideas to enrich the law. Project coordinator Dr. Godwin Jokoto urged the sector players to treat fishing as a commercial business as it happens in other countries.
The engagement is part of measures to ensure broader input into the new Fisheries Act to strengthen the country's blue economy. As part of moves to make fishing an economic venture, the law will be made to cater for all concerns by players and fisher folks. Speaking to journalists after a presentation on the new law, Project Coordinator of Ocean Governance, Dr. Godwin Jokoto, stressed the need for fishing to be treated as a commercial venture to support local economies.
We are actually moving to the direction of the blue economy. where we actually harness our resources in terms of the marines for the betterment of this country, in terms of business and wealth. And that should be the direction in which we have to gravitate. If you look at a country like Norway, I mean, their basic staple here is fish, and the economy runs on hydrocarbons and fish resources, and they have enough to spare for future generations. So we must exit from the point where we treat fishing at the subsistence level to that of good business, which can transform the lives and the economy of this country.
In his welcome address, Head of Department at International Legal Studies, Dr. Kwekwe Nusin highlighted the importance of such a law to the country's development.
The enactment of the Fisheries Act of 2025, Act 1146, and the ratification of the WTO Agreement on Harmful Fisheries Subsidies mark a pivotal moment in Ghana's fisheries governance. Now, the new Act consolidates our commitment to responsible fisheries management, sustainable and international compliance. It also introduces important provisions for conservation, enforcement, and institutional coordination, which are long-needed measures to safeguard the livelihoods of the many Ghanaians who depend on this sector.
The meeting also reviewed the World Trade Organization's agreement on fishery subsidies.
That's all for business here on the marketplace. Thank you for watching today's edition. For more business update, visit myjournalonline.com and you get sweet stories. The inflation slows to 4-year low of 8%. And also, Mahama government sets bold agenda to revive Ghana's oil sector. Energy Minister outlines new policy and a lot of insightful stories there. Don't forget, 2 p.m. today will come your way with Beyond the Numbers with Ami, Kofi, and the team as well. We'll bring you insightful conversation on Ghana's oil sector. Thank you for watching. My name is Winston Taki. Have a good business day. Bye-bye.